let me introduce our first panel. So our first panel will be Dr. Doris PADMINI, SELVARATNAM. She is currently the head of Industry Community Liaison Office, Faculty of Economics and Management from UKM. Her expertise is on community development expert, and previously she was the course coordinator at the Centre for Entrepreneurship and SMEs Development, also known as UKM SESMAT. She conducted courses pertaining to senior startup, social entrepreneurship, economics of women in health, economics of social policy, political aspects of development, and also industrial training. Her topic would be on strategic financial planning. So I would like to invite Dr. Doris to please present your sharing session for today. Thank you.
Thank you, Shaira. Good afternoon, Dr. Kalaivani, the other panel speakers, and all the participants. So I'm going to be talking about expenditure planning, personal and also for family and company. I'm going to start with theoretical perspective first. So when we talk about planning for expenditure, we need to have our income, and also we need to plan ahead how we are going to make use of this resource. When we get our income, whether it is earned specifically or whether it is a gift, it also shapes how we think about that money that is going to be in our hand, and whether we are going to spend it with a purpose or with a plan. When it's a gift or a windfall, you call it, um, we tend to think, oh, I just got it as a gift and I can spend it immediately. And there is not much thought about saving it for a future or a better purpose. And this is different in terms of if you have earned that money through hard labor, which is known as wages or salary. There is also another take on how you plan your spending, which is known as selective social norm. Spending habits that are learned from your family members. So if you see your parents, how they spend their money, if they don't do any planning, you also tend to pick up on that. But if they meticulously sit down, decide as a family, or if you see your mother or your father doing the planning on how to spend that money, that hard earned income, then you will also tend to pick up on that habit. Sometimes parents will say, oh, you need to have a book, you need to write down every single cent that you spend for your pocket money. You need to write it down, and then at the end of the week, how much money do you have left? There is also a peer behavior influence. You see your neighbors spending, you see your friends spending, they are buying cars, and then you also see, okay, I think I also need to change my car. And then when the festive season comes, they change household items, and then you feel like, oh, my neighbors are changing, I also need to change. Or your office colleagues, or maybe also some of your family members are spending to purchase some items, and then you feel, oh, I'm pressured to change. So it is also again back to our own motivation, our self restrainment. How do we do this? And the fourth one is on mental accounting. When we know that this is the amount that we have in our hand, are we able to purchase items, or are we able to keep aside some money? Some people are able to do mental accounting, some people are just not able to do mental accounting, so they need to have their own papers, or like the app the other day that was introduced. So everything is done properly, and you can keep track based on the app or in the paper form that is being recorded. So now there is a term that is called 50-30-20 budget rule. This was popularized by Senator Elizabeth Warren in US in her book All Your Worth: The Ultimate Lifetime Money Plan. So 50-30-20 is 50% on your needs. Needs as in your shelter, your food, your drinks, and your clothings. 30% on wants. Wants is something that you can do without, but you feel it's nice if you have that. For example, for leisure activities, additional accessories, etc. And the 20% is for savings, and savings is for emergency purposes. And let's go to the next slide. So expenditure planning for the 50-30-20 budget rule. So needs, wants, and versus for savings. So what's in the needs list? So if you already know what is in the needs list, you will keep this as your top priority. And besides your top priority, you will look at what is in the wants, and the last is your savings. But many people also think that savings should come first. Although it's just a 20% small amount, they will put aside from their income. Let's say if you have 1000 ringgit, from that 1000 ringgit, 200 is kept aside for savings. And then from the balance, 500 and 300 is put for needs and wants. So, needs, back to the needs. So, if you already know these are the things that I have to have, you spend for that first before you go for your wants. Okay, so groceries, because you need to eat, and you also need to rent a place, you need to have a car or motorbike, or you need for your transportation, utilities, your phone, handphone, mobile data, and things like that. And also for your health expenses, because if you're not well, what can you do at the end of the day? Your house insurance, auto insurance, children's education, study loan, childcare, etc. So your wants are the excess, as in accessories, jewelries, dining, special meals, etc. And okay, let's look at the next slide. So uh, for the individual and also for the family, you use the 50-30-20 rule. Now for the business, we have something that is known as capex, which is known as overhead expenditure, or we have the opex, which is the operating expenditure. Overhead expenditure is similar to the needs, whereby you have to have those things. Without that, you cannot do the basics of your business. And for the operating expenditure, this is variables that will change over time. And most important in this aspect is the materials that are needed for producing the products and also the services that your company is producing. And besides the materials, you will also need labor, machinery. You will need marketing, R&D, and also for the transportation costs. All right. I think I've already come to the end of my slides. So, in summation, I would like to say plan your expenditure from the start. Expenditure planning for individual, family, or business. Make good financial planning decision, and also have a rational mindset. If you have a rational mindset, you will know how to prioritize your expenditure. No one is perfect, but remember, practice makes it perfect. Thank you.
Thank you a lot, Dr. Doris, for your sharing session.
Welcome.
Okay. So for now, I think it's a great based on the sharing session just now, I find that actually our spending behavior is very much affected by our family and our environment, and on what type of behavior we have towards finance. And actually, planning is so crucial for our financial management.